attacking and pushing things back down. Where do we go next? Hello Adrian, and welcome back to another episode of the Dang Oracle. It is 7:30 p.m. UTC plus 8 is my time zone, and welcome everybody who is watching around the world. First of all, wanted to wish you all the best for this Friday. It is either you look at it as the first day of the weekend, or the last day of the week. Either way, it should be positive. We are ending the week and we are going into the weekend. That's basically how we are looking at things. Always on the bright side of things, of course. Anyways, for the people who missed out on, who were watching me on YouTube and were confused that there was no YouTube video, I'm sorry, but we had some technical issues and I was sounding like a chipmunk for a little while. But yeah, sorry, the video is not available on YouTube, only on Facebook. So if you want to still watch the video from yesterday, you can go to the video section on my Facebook page, the Dang Oracle on Facebook, and you can see what happened yesterday. But other than that, welcome Hardcore Crew, welcome Lex, Gita, welcome Darren, welcome Tina, welcome Michael, welcome Gerson, welcome Darren and Gerson. That bearish divergence worked out, didn't it? So yeah, I think Gerson was the person yesterday who saw who spotted the bearish divergence, and we immediately showed that as well on during the live stream as well. Happy birthday to you, Tina! Happy birthday, and hi, Monko. And for your birthday, Tina, you get a red candle. I'm sorry, I'm just kidding. Hi, Charles. So let's take a look on the COVID numbers while people are slowly trickling in. So we are now, wow, I just refreshed it. We are now at over 3.1 million cases in the US, over 1.750 million cases in Brazil, and India and Russia are nearing the 800,000. Yeah, it's looking pretty bad in those top countries, to be honest. Let's take a look on the global chart on how it looks, and we are at over 12.2 million cases right now confirmed, and the chart is now it's not slowing down. Actually, now it's just going sideways. It doesn't have that dip, so that's not really good. I'm pretty sure everything else looks the same on the top 6 country charts. Yeah, it looks pretty bad for all the top 6 country charts as well. So yep, well, break even is not that bad. Break even is not that bad. It's better than losing money. Anyway, for today I have Macau Imperial Tea. It's a cheesecake cheesecake milk tea. It's quite sweet, to be honest, but yeah, just my wife had a craving and she wanted something sweet, so she ordered Macau Imperial Tea. Anyway, where do we want to start? Let me think where we want to start. Well, let's go into our technical analysis for Bitcoin, I think, and follow up on what transpired yesterday. I think that that's the most important thing. So what I've told everybody was be very careful with the situation, because we are still technically making a lower high on every spot and position. As you can see here, we made a high, we made a lower high, and we made another lower high here. And if we would not be breaking out of that resistance, and that's why I kept on saying, like, and I've been saying that for a really long time, for the past couple of days, what I want to see is, yes, this push towards this for some people who are already FOMOing in after $200 push towards the upside. I was like already like, calm your jets, guys, calm your jets. As long as we don't break out and make a higher high and break out of this basically out of this triangle, you know, if we get rejected here, I would become pretty bearish pretty quickly, and that's sadly enough what happened. As we can see, a huge red red candle towards the downside transpired, and we actually closed the daily below the EMA 21 as well. So if you listened to what I said yesterday, how I was positioning myself, well, then you kind of know what happened as well, and everything worked out perfectly. So what did I say? I was waiting for, of course, this rejection towards the downside. And if I said if we would be breaking and closing a candle below the EMA 200 or this purple line here, as you can see here, this purple line, okay, maybe let's move this one first. Breaking below this EMA 200, this purple line, I would be suggesting to go on a short once again. And shorting, I shorted from around 9,230, something like that. After that, we bounced back up towards the EMA 55. I shorted it from there, and as you can see, it went back down. And I told you guys it will most likely go back down towards this green box towards the downside, and which was also our golden pocket or Fibonacci ratio. And yes, I have shown that also yesterday. Boop, as you can see here, let's make it correctly on the top side and the downside. And you can clearly see the golden pocket ratio was 9,125, between 9,106 to 9,125. And as you can see, we bounced exactly onto that spot at 9,114. And what did I tell you guys? Most likely it's not going to be breaking. Why? Because I've shown you on the heat map chart, as you can see here. I told you guys, look at this, guys. We have very strong support on that area, right? So picture perfect. And I told you guys I'm going to be longing, although that everything looks very bearish. I mean, at this moment in time, I am going to be longing from that position for that bounce towards the upside, because yeah, most likely we will have a bounce from that area. And basically that is what is going on right now. We are having a small bounce from that area. So I am still in my long right now. Where do I expect this bounce to be going? Well, not too high, of course. We can't be expecting this too high, because this is really looking pretty bad. So to be honest, I'll be looking forwards to be setting up my shorting positions once again very soon, right? So, but where do I expect to be closing my long position? Well, we can make it once again a Fibonacci retracement from this to this bottom here. And as you can see here, the three key levels are here, 9,250, which makes sense because that's also the EMA 21, as you can see, the yellow line at 9,259. So that would be one of the positions that would be crucial for us to be going towards the upside, right? Another key area would be the 0.5 pip level or the 9,300 area, because, well, first of all, it's a very nice round psychological number, and also would be matching up with this green box that we would be seeing. And then we have the third area, that is of course our Fibonacci golden pocket ratio between 0.65 and 0.618, which is around 9,350, which matches the simple 200 moving average, or 9,340, as we can see. So how would it look like? Well, it would be looking like something like this. If we would be bouncing up, we would be bouncing up towards around this area, or it can go a bit higher towards this area and then break down from there. Most likely, I'm quite confident now that we will most likely be breaking down over the next week, most likely towards what I keep on saying. Most likely, what will happen, I don't think we will completely break towards the 8.6k area just yet once again. What I do think, it's going to be a slow bleed once again. I think it's going to be going towards something like this, and then bounce up once again on the EMA 100 around the 8.8k 8.9k, small bounce up, and then go down towards the 8.6 K or K area. That's basically what I am expecting. But like I said, I do expect us to be going towards that area. So that's the reason why we should be preparing ourselves and trying to set up into some shorting positions, right? So Where would you be first of all, John, you can find the heat map indicator not on the trading view chart, but you can get a free account on this site here, tradinglight.com. You can just make a free account there, and then you can see the heat maps on Trading Light site. So you can just create an account there. Where do I set my stop losses? Well, that's what we're here for, right? Like we analyze things, and we just look out for things that make sense, right? So if I would be going into a short, I'll be most likely be trying to be shorting. Of course, what you want to be shorting is at the top of the range, right? Let's say we are going towards the 9,350, which is around this area here. Where would I be stopping my stop loss? Well, very, very simple, right? The previous high here at this order block here. If we would be breaking out of this green box here, most likely we will be going towards this green box, towards the upside. So there's no point in holding my short at that position, right? So that's how you basically have to be putting your stop losses, making sure that you don't get completely wrecked. And as you can see, the difference between 9,450 and 9,350 is around $100. So that will be my stop loss, right? So if we get rejected there, we will get burned for a smaller amount, right? But yeah, that is really the top of the range. Like I said, 9,350 is most likely the top of the range. Something else that you also can do is use the 0.86 FIP level as a stop loss as well. For example, as you can see here, let's say you enter a short at 9,350, you can put your stop loss just above the 0.786 level, which is currently at 9,408.5, right? So what you can be doing is just put your stop loss at 9,410, for example. Then the difference between this area and this area is around $60. So your stop loss will get triggered quicker, but usually it works really, really well, right? So for people who are more risk adverse, who are willing to be, waiting it out a little bit longer, you can just use the 1-to-1 FIP ratio, right? So 9,490, you will have the previous high, and if we break the previous high, then we are creating a higher high, right? So then it makes sense that you would get stopped out. But for people who are less risk adverse, the 0.78 FIP ratio level is a very good stop loss position as well, and it works on both ways as well, right? Towards the upside or towards the downside. So 9,410 is a perfect spot for us to be closing our short in case we are wrong, and in case things go towards the upside, right? So those are two ideas that you can think about. But for me, of course, it's not sure that we go all the way to 9,350, right? So for me, I'll already start laddering in actually from around the EMA 21. It kind of depends on how everything looks like, right? Right now at this moment in time, we can clearly see that the RSI is quite low on the 4-hour chart. Let me show you. It's quite low on the 4-hour chart, as you can see. So it has quite some space to be going towards the upside, right? So let's say we get a bounce all the way back to around this area here, right? 54, like a 54 RSI. Well, the cool thing is we can exactly look it up what the 54 is around in price when the RSI is hitting around there, right? So 54 would make our price at 9,303, right? So 9,303, where does that match up? Well, that matches up with our 0.5 FIP ratio, right? Once again, let's take a look. Boom, boom, boom. Let's move this one down, and we'll put the FIP ratio once again from this top to this top, and as you can see here, 9,300. So yeah, that makes sense as well, right? So just looking at the RSI and making an input of the RSI, if we go back to our previous top of the RSI, going back to 9.3K is very probable as well. So those are the areas that I am looking at. I want to be seeing first. Maybe we will immediately already get rejected at the 9,250 or the yellow line or the EMA 21. So those are the things that we should be looking at. So if you're a very aggressive trader, you can, for example, put in a small laddering position. For example, right? Let's say you want to be shorting $1,000. Just an example. So what you can do is just put $200 short on the 0.382 FIP level. Then you can go a little bit stronger at like let's say 40% on the 0.5 FIP level, and then another 40% on the golden pocket ratio, right? So you have everything laddered in. So if price does move towards 0.5, then you have an average entry of 9,280, and if it does go all the way to 9,350, then your average entry price is around 9,300. So pretty much perfect around that area there. So always try to be laddering in, and also, like I said, it all depends on how risk adverse that you are at that how you're feeling, because you have to be just very aware of the whole situation. If we do see that we get immediately rejected towards the downside, then of course you will have to be entering your positions at the lower price, but don't be too much in a rush and entering your positions when it's pretty clear that we are very low right now on the small. Yes, Pledit. Money has actually been going out from the cryptocurrency into the traditional markets, which is normal, right? And we can actually see it here. I'll show you. So, as you can see here, we have basically a downtrend. So money did move from the traditional markets into cryptocurrency until around May, and that was it. And since May, we basically made an uptrend towards the upside, meaning starting from May, most of the money, more money went into the cryptocurrency, from the cryptocurrency into the traditional markets. And as you can see right now, we are actually still going up, meaning more and more money is floating out of the as you can see, and this is the 4-hour chart. So as you can see, we had like some sort of like a bull flag, and it's breaking out now towards the upside. So yeah, more money is flowing into the traditional markets right now from cryptocurrency, and it has actually been doing that since May. Kind of makes sense as well, because, well, let's take a look how price is since May. And as we can see here, this is May. This is May, starting May. And what can you see? Well, we can see that, holy macaroni, the price of Bitcoin has been ranging since May. And then, of course, what is the difference? Since May, the traditional markets went on a huge bull run, right? So why would people be investing into cryptocurrency when you can make way more money investing into traditional markets, right? So that's exactly when people moved money from the cryptocurrency industry into the traditional markets, and that's what that chart shows you as well, right? So it for me it makes perfect sense, right? The only thing that I wanted to know is, this whole pattern, is that accumulation or is it distribution, right? So that's the whole mystery that we're trying to be solving. And well, like I said, right now, if we are zooming out, are we more towards the downside of this channel, or more towards the upside? Well, we can clearly see that we are definitely more towards the downside than the upside right now, and we are in some sort of a triangle right now. And yeah, like I said, the whole momentum has been shifting more towards the downside than the upside. But we are also having a small pullback on the traditional markets. That's the reason why today the Bitcoin price also went down quite strongly. let's just take a quick look on the S&P. As you can see here, on the S&P, we made a nice push towards the downside as well. But don't misinterpret this as well. Most likely we'll this is some sort of like a channel, and most likely we'll be heading back up pretty soon once again. I would say though, like, so this is some sort of like a flagging formation, and most likely we'll be heading back up for a little bit more, to be honest. So while the traditional markets are doing that, I do expect Bitcoin to be pushing back up a little bit as well, and that's the reason why I do expect us to be going more towards, like, 9.3k, 9.350. It would make total sense that we get a push back up towards the upper side. But at one point, things will be starting to look very, very tired also on the traditional markets, and then we have a real correction. Well, there's a real correction. I would say like a 10% correction towards the downside. So a Nasdaq pulling back from that spot, like this, right? A small V. So something like this, a small V, and not macro, and I'm not in a macro perspective. I still believe, looking at the monthly, things are still pretty fine. But if the traditional markets are going to make a V like this, then of course Bitcoin is going to be suffering a little bit stronger, and that's the reason why I keep thinking like, yeah, 8.5, 8.6k makes quite a lot of sense when we do get that pullback. Not right away, right now, well, very short term. And we also have the weekend that is coming up, right? So we have the weekend, so we have the weekly close of the traditional markets, and then we can kind of navigate our way through for the next week. But most likely next week, I do believe that we will have our pullback towards, like, once again, most likely a red line here, 8.8k. Maybe we will make a lower low. That would be interesting as well. So maybe we will be retesting the 8.8k and break this lower low point here that we made on the 28th of June. So that's definitely a probability. So 8.8k would for me would make a lot of sense next week, but not completely breaking just everything just yet. And then maybe the week after we can see 8.5, 8.6k, something like that. That would make the most sense for me. And also, taking a look at the heat map, we can clearly see the same zones that we've spoken about before already. So we have some support here, 8.8k, as you can see, and then the biggest amount of support is 8.5k, as you can see on the heat map, a very, very dark yellow line. So I think that we'll be immediately breaking 8.5k? I don't think so, right? So we will definitely, if the price does go near 8.5k, that's definitely an automatic long from that area. Except, of course, if they suddenly pull away all the buy orders, and then we're completely screwed, of course, if that would be the case. But like I've explained it also before, we need a price that is basically below the order block where people made a lot of longs. So in this area, this is the area where we had a ton of longs, which is around 9.1k area. So I do believe that we will have a dump towards below that area, most likely back into this order block here that we're having on the previous time, and that would make sense, right? Something like here, and that is around the 8.6, 8.5k area. So that's pretty much where I think Bitcoin is headed for the next couple of weeks. But things have been quite slow. But it will most likely pick up some pace once, like I said, once the traditional markets start to look a little bit more tired. They don't look that tired just yet, but yeah, it eventually, it's like with everything. After a huge bull run, you always get a pullback, right? So that's basically what we are waiting for. But for now, in the short run, I do expect us to be slowly floating back towards the upper end. Do we go back into this green box? Do we break it? Yes or no? If we do break it, I do expect us to go to this area here, or the golden pocket ratio. I don't think we will go much higher than that. But yeah, those are the key areas that we have to be looking at. 9.3k seems for me a very, very nice area already. So like I said, I'll be starting to ladder in already from that area once again to be positioning myself for a short when we see it fit on Monday. But that's not what I'm going to be immediately doing right away. We still have plenty of time to be settling ourselves and to be seeing what is going to be happening over the next couple of days, right? So we have the weekend. Usually during the weekends, nothing that much happens, so yeah, we can take our time, I feel. So let's take a look quickly once again on the Nasdaq chart. So this is the weekly close for the weekly chart for the Nasdaq. And you will clearly see that this is insanely bullish, as you can see. So what am I looking at? So if the weekly closes like this, then yeah, most likely we will be seeing continuation after a small pullback next week, right? So although the daily looks a little bit more tired, as you can see, it's a potential reversal pattern. But like I said, yeah, let's say we pull back a little bit here and then continue. That makes a lot of sense. But the problem is this pullback here will make Bitcoin go to like the lower 8,000. The lower 9,000. Well, the higher 8,000 area. Sorry. So 8.8k, 8.6k. That's pretty probable at that time. So, but am I bearish on the traditional market? Hell no. This looks very strong, definitely for Nasdaq. S&P is a little bit less strong. It looks less strong. Let's take a look on the daily. Yeah, daily is already touched the 10 simple moving average twice now, but yeah, still not below it. So nothing we can say there. Let's take a look on the weekly. On the weekly, it looks less strong. So the weekly is still a green candle, but if it stays like what we want to see is a close below above the previous weekly candle. So I do still think that we will be closing above 3,129. So so that the body reaches a little bit higher on the weekly close, and then we get continuation most likely next week as well. How is COVID doing in the country? There's a lot of cases, but I try to be as safe as possible, trying to be at home most of the time. Well, most of the times I'm just staying at home and watching charts anyway. So I'm not the most exciting person. The only thing that I am annoyed about is, of course, you can't really be social. And I am the kind of person, and definitely my wife is the kind of person to be meeting a lot of people, just hanging out with a lot of people. And I think the second thing is the worst thing for me is usually I travel a lot. So before everything happened, I was flying out and traveling pretty much on a monthly basis. So I was flying from one country to the other country pretty much every month. And that has been my life for the past 4 or 5 years or something like that. I've been traveling over pretty much the whole world now. I've seen almost every country, and that's kind of my passion and my wife's passion as well, traveling. So yeah, that's probably the worst thing for the both of us. But on the other hand, well, now we have the little Dang. So the little Dang is it's much harder to be traveling around with anyway. So maybe it's a good thing that COVID happened. So that we are forced to be staying home rather than traveling around all the time. But other than that, yeah, that's pretty much it. We just try to be as safe as possible and take our precautions and measurements, right? Okay, so since that we have our candle close. Yeah, we have our candle close. We are over the 12-hour candle close is closed now, and we can see on the next candle. Let's take a look on the expected move charts. Expected move chart. What are you saying? So first standard deviation towards the upside is 9,244. So that makes sense, right? 9,244 is one of the areas that we are looking at, or back to the EMA 21. First standard deviation to the downside is at 9,080. Would still not be breaking any structure or anything like that. Would just basically touch down on our touch down basically on our triangle, right? So here, sorry, here, just below our triangle, and then maybe a wick down there. So it's not that bad. It's not that bad. But as you can see, we are angled a little bit towards the upside, so there is a little bit more probability that we are going towards the upside. I do believe that we will be going towards the more towards the upside than the downside, though. Why? Well, we can clearly see it on the 4-hour indicators. As you can see here, stocks are starting to be are basically at the bottom and starting to be curling towards the upside. So I do believe that we will have a bounce either way, even if it's not that big. Also on the RSI, let me remove this one first. Also on the RSI, we can clearly see we have entered basically what they call oversold. There's no such thing as really oversold, but yeah, basically in the bearish territory. And as you can see, it's trying to move its way back to the upside. And as you can see, we will be crossing up on the EMA if we break over 9,235. So yeah, that EMA 21 area basically, right? EMA 21 area on the on this 4-hour chart here. So if we do break above this EMA 21, I would be expecting continuation, either towards 9.3 or towards 9,340, something like that, towards the 200 simple moving average. That's the areas that we have been looking at. But do I think that it will be moving very, very quickly? Well, I don't think it will be moving very quickly, not towards the upside, but also not towards the downside because of the weekend that is coming up. So I think later tonight, when the traditional markets will be opening, since we had that push towards the downside, as you can see here on the traditional markets, we have that push towards the downside. I think that we will have it has been trying to be holding, the S&P has been trying to hold the EMA 55, so I do believe that we will have a small push towards the upside first before we maybe make a push towards the downside a little bit more next week, right? So during the closure or the last trading day later tonight, I still think that we will have a push towards the upside. So that would mean also that Bitcoin is most likely going to be having a little push towards the upside as well. But yeah, upside and then a little bit upside and then most likely a little bit ranging toward the sides during the weekend, maybe a little bit up. We'll see it how it goes, how far we goes. But like I said, depending on the speed, yeah, 9,350. If it goes really, really fast, we can actually even go to 9,400. But as you can see, if it happens tomorrow and we go to 9,400, it still is in our zone here, right? So it's still in our triangle. So nothing is completely conclusive, right? So, but that. Yeah, I mean, yeah, maybe a wick, maybe a wick to push out the shorting positions. that's possible. But like I said, I'm not in a rush to be in a position or anything like that. I'm just waiting right now to see the little bounce. Later tonight, most likely before midnight, I'll be closing my long position. Wherever the price is. If it's at 9.2k, I'll be taking my profits. If it's 9,220, I'll be taking my profits. I don't want to be stuck in a position for the weekend. And then during the weekend we do our daily analysis and then prepare ourselves for the push towards the downside. Because yeah, let's talk about the downside. Why do I think that we are going towards the downside? Well, the 12 hours stocks are curling down, of course. Not only that, and we also can see that the stocks on the daily are starting to be wavering right now. It's not curling over just yet, but it's wavering a little bit right now as well. And like I said, for the weekly stocks, I put so much emphasis on the weekly stocks. It has been curling down, and there has never been a bull run with the weekly stocks curling towards the downside. So just fighting against the weekly stocks is something that it's very rare to be happening. So yeah, my conclusive is still the same. I still think this whole pattern that we are seeing is distribution and not accumulation. And yeah, of course I can be wrong, but yeah, it's been like that for quite some time now. And every time it's quite funny because every time we see like a $200 push or $300 push towards the upside, then everybody is super bullish and everybody, yes, we're going to the moon, we're gonna break the 10k, and then we get that giant red candle towards the downside and everybody's super bearish again, and then we have that green candle of $200, or in this case $400 towards the upside, everybody is super bullish again, and then we get the red candle towards the downside. And once again, I remember with that comment, was it yesterday? Yeah, on the page. Yeah, we're missing out the bull run, man. We were missing out on the bull run. I was like, hold your horses, calm down, calm down. It's a 2% move towards the upside. Like I said, when you are in a trader, when you are a professional trader, or when you become more experienced in trading, you will quickly realize that do not get FOMO and do not get fearful, right? So when I am 100% sure when we saw this candle towards the downside, and even though I am saying like, well, it's most likely going to be bouncing here, I'll be longing this spot, but a lot of people will be seeing this red candle and they will be like, oh, it's gonna break this area, we gotta get out. Of course it's possible that it breaks, but the stop loss is right there. Where's the stop loss? Well, you can see the blue line right here. Right, you can see exactly the blue line right here. So you can just take this as the stop loss area, and well, you'll be, if you are incorrect, you'll be losing like maybe like $20 or $30 or something like that on your position. So in terms of like risk management, it makes all the sense in the world for me, at least. So I don't really look at it at how the price actually moves, or how fearful or how bullish I am. I'm just looking at purely at technicals. We are at a very low area on the RSI. We are basically oversold, right? We are basically oversold. We are basically oversold on the RSI. So yeah, and we are at the support level. We checked the heat map. We saw the Fibonacci level. It's the golden pocket ratio, and that's it. It's not, sometimes people make it a little bit more complicated than it is. Sometimes it's just very, very simple technicals, but doesn't mean that you will always get it right. No, there will be times that you will get stopped out, and like this last week I got stopped out twice, right? Doesn't mean that my PNL is still is negative for this month. No, my PNL is already positive, because I have already made my short from this area to this area. So I covered the loss before already. I made a scalp from this area to this area, and I'm in a long right now. So everything good. I am positive for the month. So that's what I mean with not really caring too much about the emotional part, or thinking you will be missing out on something. If the price dumps, for example, if the price would dump like $1,000 and I would be not in a position, that's when I would be really pissed off. That's when I really get pissed off, because then I didn't do my job as a technical analyst, and I didn't see that there was a big move upcoming. But the big move, we already are watching it, right? Like I said, getting that short, well, most likely it's going to be like that, right? That short from 9.3k, 9.2k, whatever it is, 9 points. Some people have a short, like I have my trading friends who are still in a short since 10,400. They have a short from this area. Wait, not this area, higher, from this area here. Not even that, it's even higher. Here, this area here. So I have friends of mine who are in a swing trade, and they have a short from this area here, and they're not touching it. So from this area all the way down here, that's an insane amount of PNL already, but they're not touching it, right? They're just moving their stop losses towards the downside, right? So that's the smartest thing that you can do. But those are swing trades, and yeah, that's swing trading. What I'm showing is mainly day trading, because I would just want to go in and out and take my profits. But I am in a swing trade position as well, as you know. I'm still in my swing trade position from since how is it, 2 weeks ago or something like that. And I told you guys I'm gonna let it run for like most likely a month or maybe 2 months. It depends on how things go. But I still am aiming from 9,300 all the way down to 7.5k, and that's and that's my swing trade. And if that happens, then I'll be good for most likely for the year. I mean, and that's what the PNL. Those are the trades that make your year. That's basically what makes. And then the day trading positions. Well, yeah, you just trade and scalp and just push on and push off, and things will work out, and you keep yourself busy and excited, and actually the most important thing is you keep yourself focused on your technical analysis. You keep seeing where things went wrong. You keep learning things. You keep improving things. You keep seeing where was I, where could I have done better, where was the mistake that I've made. And that's way more important than actual results. And definitely for people, at least for people who are just learning or starting out to be trading, that's way more important than your actual monetary results. Because, like I said, if your TA and if your psychology is fundamentally good, in the long run you'll be making money anyways, right? So, yeah, I think I pretty much covered what I wanted to say. What am I looking at? So traditional markets, I do still think that we will have a small push towards the upside later tonight. I want to see where we close for the weekly on the traditional market, but most likely it's going to be pretty positive on the weekly. So I do expect a continuation on the traditional markets, but I do expect also like a small pullback in the short term. So in the medium and the midterm, I don't think that we are going to be pulling back crazy, but crazier things have happened before. So for Bitcoin, in the very short term, what am I looking at? Well, closing my long positions. Most likely, I'll be aiming for this green box here, or even lower. It doesn't really matter. I'm in profits right now, right? So wherever it is, around midnight, because if people haven't noticed just yet, around 2 to 3 hours after the New York Stock Exchange is open, you actually get the most action in terms of volatility. So it has been like that for the past couple of months now, since the traditional market has been doing so well with the retail people trading. So you have the most volatility around 2 to 3 hours after the traditional markets open. So for me, that's around 11:30 to midnight, my local time. That's perfect for me. And then I will make my decision there to be most likely to be closing and taking my profits on my long, because like I said, I don't want to be stuck in any position during the weekend. Most likely it's not optimal, but who cares? Profit is profit. But then I want to be set up properly for next week. And I do believe that we will have this pullback most likely towards 8.9, 8.8K during the next week. So breaking this triangle here, most likely towards the downside. So possible targets or possible entries will be the EMA 21. But I don't think that's high enough. So I do believe that most likely we'll be going towards 9.3K or 9. Even we could actually even if it's during the weekend, even wick up towards 9.4K. If it's Monday, we don't as you can see that the triangle goes towards the downside, right? So if it's already Monday, then 9.4K is most likely a good stop loss position rather than an entry position. Then I would be looking at like 9,350 that area. So around 9.3K, 9,350. Most likely we'll be entering a short position around there if we get that high. if we don't get that high, then we will have to go with the momentum, right? So the momentum is, well, if we are breaking below this green box here, and definitely below this body here of this candle. So if we are going below 9,000 and a close below 9,080, I will enter my short position from there as well, because I'm still aiming towards 8.8, 8.6K. So that's still $200 to $300 spread towards the downside. So not really an issue. So those are the areas that I'm looking at. 9.3K, somewhere there to be entering my short position. If it doesn't work out, then we'll have to be shorting if the price goes down. Of course, if the price goes down below 9,080, closes below that, closing of the candle below that, then I'll be entering my short from that area as well, because that would once again break the structure of the triangle, right? But for now, short term, don't worry, the bulls are still around. I still believe that we will have a small push towards the upside. Let's see how far or how high we go, and then position ourselves or make a plan during the weekend, and then figure it out by next week. But yeah, other than that, my bias is still the same as it has been for the past a very long time now. Oh my god, I think everybody who is watching my channel is like bored of me saying like, yeah, well, most likely going to go to 8.5, 8.6K. I think most everybody is like, dude, we don't believe you anymore. Every time you say that, the price pumps up $200, but then it does get bumped down to $300 once again, pretty much the next day. So, you know, just saying, just saying. Anyways, wish you the best. Have a amazing weekend or last day of the week, whatever you want to be, how you want to be looking at things. Enjoy, and then see you again tomorrow, same time, same place, 7:30 p.m. UTC +8. And until tomorrow, please stay home, stay safe.